Monica Everett. I'm with York Alternative Risk Solutions, and everyone kind of thinks of York as a TPA, and we also help put together captives for our clients. With me today, I have Chris Alvigi.
I'm an insurance broker with Alliant Insurance Services based out of New Jersey.
And I'm Pete Marty, member of the captive, and with Hanna Solar, CEO and founder of Hanna Solar out of Atlanta, Georgia.
Thank you. So today we're just gonna, keep it really informal, obviously. It's a small group, so if anyone has any questions, just feel free to raise your hand. We have, 45 minutes to kill for cocktail hour? So we're just going to talk about, getting a group captive started, and the process is not really as easy as everyone thinks. There's a lot of basic elements to the process, but obviously there are some other factors that come into play, like timing and market conditions and all sorts of things. So what makes a good foundation for a group captive? We're really looking for a group of like-minded entrepreneurs for a group captive, and they can be homogeneous or heterogeneous. There can be franchisors, association members, there are agency captives out there. And then attitude, obviously, is one of the key components of the members that we're looking for in a group captive. So Pete, I don't know if you want to talk a little bit about, your attitude and why maybe you looked at a group captive as a founding member.
Sure. Yeah, when we first started looking at this, our broker brought it to us as a concept, and Monica came in, and we had met at the National Solar Organization big conference out in, I can't remember where it was that year. Vegas, was it Vegas? So we met out in Vegas, and it just seemed like, we kept on paying insurance premiums for years and years. We were probably 7-8 years in at this point. No claims whatsoever. I mean, literally, I don't think we had a claim for 5 of the 7 years before this. And, the money just kept on going out the door. We thought there's got to be a better solution than this. And the captive concept was brought to us by Monica and Bob, and we just started looking at it and felt that our other compadres in the industry were having the same experience as well. And so it just seemed like the right time, and it's a process, though.
Mm-hmm.
I think a lot of my clients as a broker have become numb to the insurance buying process using the standard model for risk transfer. I mean, up until recently, the market has been in a tailspin going down. So you go to your client, exposures are up, revenues are up, rates are down. So even if your rates are up, even if your exposures are up 20%, you're still looking at a flat renewal. And that's really good while it lasts, but I think recent history has shown us that's probably not going to last too much longer. We're going into the property market, the reinsurance renewals now. Everybody's expecting at least a 20% increase on the property, and that's going to trickle down to other lines. And clients, as Pete said, that you're just looking for control. You want to understand where your premium dollars are going. You want to understand that if you have a claim that you're not liable, that the insurance company's not just going to pull your feet out and settle the claim, and then it impacts your loss ratio. They want to make sure that things go their way, because these are type A people, generally speaking, right? And they want to make sure that they're in complete control of the process, not only in the transactional process, but the claims process.
Mm-hmm. Right, and those are some of the elements of really good quality members. They're focused on risk control, they're the best in class, they're producing a quality product. Another thing that's really important for the foundation of a group captive is the domicile. Obviously, we're all here in Cayman, and Cayman is the leading domicile for group captives. They have expertise in group captives, so the ease of doing business here is fantastic. They understand them. They don't need to ask a million questions when you're trying to launch a new program and get it licensed. Another thing that's really important is having experienced service providers. I see some veterans in the room. We've got George Rusu with Captive Resources sitting back there. We have Joe and Rob with Pinnacle Actuarial sitting in the room. We all know how important it is to work with our service providers that are quality service providers and understand group captives and are going to be here for the long run. So another thing too, obviously a couple of other items, the TPA is important. Fronting carrier partner is important. See Mark Benz out there with AIG. Give them a little plug.
Yeah.
You know, your fronting carrier is going to be with you for a really long time, hopefully. You don't really want to have to change fronts. So you want to choose your partner carefully at the very beginning of the process. And you might go through some difficult times together, and you know, and you want to get through those together and work together on the whole
Yeah,
process.
and I would offer, as the broker, I was really happy that AIG was the front, because not only we have the strong U.S. commercial base, I mean, I understand AIG is going through some changes, all for the better, but the grasp internationally is huge. I mean, I think it's great, tremendous.
Oops, all right, a little jumpy. So, why start a group captive? A couple of the reasons, obviously, are it allows members to take more control over everything, their risk management program, their claims management process, helps the clients reduce their losses over time, and that stabilizes their insurance costs because of the way the premiums are developed using an actuary. Pete, do you want to talk about a little bit of that, what comes to mind when you talk about control?
Yeah, well, one of the things we've got to be focused on, we deal with electricity, 600 volts, 1,000 volts, and safety is job one. We work with a lot of utilities, and they take safety to a whole new level. We work on military bases. It's extraordinary what we have to do for safety, and we were still having to pay a lot out in insurance. And so, you know, by being able to take control of that, if something did happen, we were going to have a team that was going to approach it differently than if we were just paying an insurance company. They're going to settle the claim. We weren't comfortable with that, and so thankfully we didn't have many problems with that at all at the beginning. But I was really concerned about that, so I wanted to protect against that in the future as we were growing, you know, by leaps and by bounds. So controlling that loss potential was certainly one of the things we looked at.
And then obviously controlling those losses over time. The way the premiums are developed in the group captives is through an actuarial loss pick. And if you can control your losses, then your actuarial loss pick is going to go down, and therefore you're stabilizing and controlling your premiums long term. So the important elements of, or the important valued partners in a group captive, when you're thinking about launching a group captive, you want to have a good captive consultant that has expertise in forming group captives. There are a lot of subtle nuances to forming the group captive, and the actuary is extremely important. We work with Pinnacle on all of our group captives. They are the leading actuarial firm in the group captive space, and they know what they're doing. We don't really want to go in and try to retrain someone in the loss pick development process for a group. We also work with them long-term on each program, so they're going to do the reserve analysis each year and work with all the members, attend the board meetings, get to know them. And the brokers are really important, making sure that we're working with brokers that understand captives and are not selling based on price.
Yeah.
They're going in and selling the value of the captive.
Are there any brokers here? Anybody?
No.
No? Wow. So then everybody's a prospect.
Yeah.
I think that, you know, we all know who our clients are, right? And selling insurance is not an easy thing because it's an intangible. But when you know your client, you know they're making money, you know everything's good, they're in complete control, as we said, you want to make sure that they understand the process. They're going to pay the same, they're going to have the paying premium is going to generally be the same, but then you have a collateral issue, which we were able to use on this captive. We were able to premium finance it, and the cost of funds is really cheap, 3.25%, right? That cash inures back to the members, plus the interest income. They were completely happy with the fact that the claims are going to be closed out in 4 years, more or less, and to the extent that there's an underwriting profit return, it's going to come in the form of a capital gain, potentially lower tax implications, and they want to be, and again, they want to be in control. They want to understand that what they're doing, and you know, I have a client, we all do, and the captive is theirs. So the broker hopefully will stay forever, But, you know, in the event that they decide to change brokers, the captive stays with them. You hope that they make a decision to move to a broker that has captive experience and understands the process. But this inures, in my client's particular case, it's good, the benefit's going to inure not only to the children, but to the grandchildren and to the trust. That was a primary reason why they did this.
Thank you, Hess.
You're welcome.
So, and then the members obviously are important. Without them, you wouldn't have a group captive. So the members are going to have to understand the concept, have to understand the data that they're needing to provide, working with the broker and the captive consultant on timing, which can be challenging when you're trying to form a group captive. You know, you have a lot of moving parts. So working with the fronting carrier, and making sure that, you know, you may have a list of founding members and they may have varying renewal dates. That can be a challenge. So they have to all kind of be ready to jump when the timing is right. So, you know, Pete, I don't know if you want to take a second to talk about that. We're kind of getting a little off topic,
Yeah.
but the timing.
The timing was a challenge. I think it probably always is when there's a starting captive, and making sure everyone's renewal aligns, they can get extensions if they need it. You know, we had an overlap, I think, of about a month. Originally, it was going to be about 3 months, and it just worked out. It ended up being a month, but you know, it's a process. It's not without a few hiccups, but you've got to expect that. I think anything in business, and as Chris said, you know, A-types, you just deal with them. You roll with the punches, and you make sure that, you know, you've got that goal line in view, and if you're committed to getting there, then it's going to be well worth it, long run. And the board meeting too.
Right.
That was a selling point too. It's going to be
Have a
going to be in the
board meeting in
Caymans.
Cayman?
Yeah.
That's nice.
Yeah.
So I'm just going to go back to a little bit more on valued partners. Fronting carrier, most of the time the fronting carrier is going to also provide the reinsurance for the program, the spec and ag access. And the fronting carrier provides a lot of underwriting guidance. They have multiple, in some cases, hundreds of years expertise in underwriting accounts. So the captive is an insurance company, but it's obviously going to look to its fronting carrier partner for underwriting guidance. You know, they're kind of a gatekeeper for risk avoidance and keeping the captive healthy. And they're going to provide the rating for the captive. They meet all the regulatory requirements, issue the policies, and they're, as I said before, they're a long-term partner.
Well, I would just offer, what does AIG like to see in their captive partners? Because we obviously have our own ideas, right? But you do, because you're, at the end of the day, you're taking the credit risk.
Sure. No, I mean, that's why we underwrite each every individual risk. You know, we like to make sure that the company's solid, cares about risk, looking to do the right thing. Really, it's a long-term relationship.
Long-term relation. Exactly.
And then, of course, you have the TPA, loss control provider. All of those partners work for the captive members. You know, the captive is owned by the members. They report directly to the members. So anytime they're not doing their job, they can be replaced.
Yeah.
Doesn't really want to move. We just hit it harder. So again, just going back to the process a little bit, finding the right quality members is key. Gathering the data, what a nightmare sometimes the data is, right? You get the loss runs and then you go through the process, you get some loss picks developed, and then time goes by, and then, oh, wait, we need new loss runs. So we need more currently valued loss runs. So you gotta go back to the drawing board and collect all the loss runs again and start over, because you know you want them to be current. You want the information to be current. So gathering the data can be a bit of a challenge. Getting the loss picks developed, obviously working with the actuary, and that goes hand in hand with the data. And then finding the right fronting carrier and reinsurance partner, which we've talked about, is really crucial. I think we've talked about this a little bit, but just, you know, kind of in conclusion, talking about communication with all of the members, getting the timing right. I know you said, you were
Yeah.
already committed to the process. You were committed to getting the captive launched, and luckily we had other
Yeah.
like-minded members who were ready to kind of jump, and if they needed to get an extension on their current policy to make it happen, those are all things that the founding members need to be prepared to do.
In my instance, it was a challenge because the client wasn't interested in me competing against their existing broker and the risk transfer model. They wanted to do the captive, but it wasn't going to be a layup for me just to take everything on a BOR. So I was navigating with the client and the captive, trying to move this thing along with a target date in mind. Meanwhile, we're trying to coerce the existing broker to make sure that the extensions remain in place, and we had to push for 3 different extensions. And it was a little bit of a challenge because at the end of the day, the insurance company on the other side knew they were losing the business, so they really weren't very happy with us, but they had to kind of acquiesce a little bit because it's still an existing client. It was challenging.
So then, getting the captive launched, helping to continue to educate the members, which is part of the process. Every time members come to a board meeting, when they come to their first board meeting, their eyes glaze over. I mean, they really are just learning about what it means to own their own insurance company. So sitting down with them, kind of going through the conceptual presentation again, talking about, what the captive does for them and reminding them of how the captive works, because they're not insurance people, they're not insurance professionals. They're running their own business. So I don't know if you want to talk a little bit about the educational piece of it.
Yeah, it's really it's an ongoing education. We were talking earlier, some of the language that gets thrown around, me as a business owner, I'm focused on selling more solar every day and making sure that, our team is hitting on all cylinders there. The insurance meeting is the meeting that I avoid like the plague. And so now I've got to jump into the insurance arena and hopefully for the last time pick a broker, pick someone to work with long term, because this allows me to tell all the insurance brokers calling me, I'm all set, I've got my own captive. So that in and of itself is enough of a reason to do this. So that was great, but also, when you look at the long-term aspects of it and finding out what a captive actually is going to do for you, that the losses that you potentially face in the future, the folks are all on the same side of the table now, as opposed to just trying to settle a claim because they want to close that one out for the year or whatever. I don't really know how it works.
Yeah.
But it's just a lot of education, but a lot more fulfilling to be able to dig in and know that this is a long-term relationship. The more you learn, the better you're going to be at being a member in the captive, and also recruiting new members into it that are like-minded, that have great safety records, that are going to be a plus as opposed to a draw.
And plus, it's a partnership because you have the operating agreements that have to be reviewed by legal. You have the tax firms that have to review all the calculations and the potential tax implications from the business side, from the premium side versus the collateral versus the capital gains. And the ability to appoint or have your own law firm that you're familiar with and that you trust implicitly to handle your GL and your auto claims is huge, because they know they're not going to just settle arbitrarily, because they don't want to lose the client either. And working with the broker and working with the captive manager, and it's true partnership. You're moving away from the transaction, because insurance has become a transaction, right? I mean, we all know that. It's a commodity. Or is it? I look at it as a profit center. My clients always bitch because the premiums are high, but at the end of the day, if you don't buy it. Because if they don't think if they complain about the premium and they don't want to spend the money, they have a choice not to buy it. But in this way, they become fully vested in the process, fully vested in the expense, and potentially on the return side.
So then, really, the last point, we have after talking about launching the captive and going to the first board meeting and really establishing the executive committee and the board of directors for the captive. Some group captives have every single member as a board member. Some group captives choose a smaller board, and that will evolve over time. But ultimately, the members have to make those decisions, or get to make those decisions because it's their insurance program.
Yeah.
That's really all we have. Everyone can go drink now.
Does anybody have any questions? Does anybody have any
Does
questions?
anybody have any questions?
What if your potential members have very different loss experience, but for whatever reason, you have enough in common that you want to be part of the captive? How do you manage that? Or what if, when you're in the captive, somebody develops very bad luck? That's probably an even.
Yeah,
Right.
that's a great question.
That's a good question. Some captives will, and again, the members will decide this, and this is something that we bring up at board meetings. If you have a member that's consistently having adverse loss experience, do you first give them additional loss control support? Do you immediately non-renew them from the program? There's a lot of different methods that you have to deal with those clients. But I would say coming into a captive, they really need to all have good loss experience coming into the captive.
Just one second. I would think that, people spend money on insurance because you're going to have a claim, right? I always say to my clients, stupidity is insurable, intent is not. So you just want to make sure that the losses happen because you're doing business, and something goes wrong. I mean, to the extent that we can manage those claims or potential claims through loss control, it's there to help you. We're there to support your efforts because nobody wants to have their loss experience go south. But, if it becomes a recurring issue and the members aren't taking full advantage, or the model just continues to deteriorate, then it's a different conversation. Then we have to talk about an exit strategy potentially from the captive. And that
I would say, though,
that becomes a more complicated.
The majority of clients that come into a captive, whether it's a group captive or a single parent captive, they will control their losses.
Yeah.
To their best ability, because again, those are their dollars sitting there.
Yes.
The gentleman in the back had a
I
question.
have to apologize if you already went through this because I was a little bit late, but how much time did you spend at the front end on the shareholder agreement, wind down, extraction, liquidation, all those sort of governance pieces that are non-insurance, but they're more, like they're sticky things?
Legal?
How much of that was dragged into getting it launched? Because you said you had to go through a couple of delays in terms of getting.
Right. That really didn't delay the process. I mean, we've put together enough of these group captives that, we have counsel that develops the shareholder agreement, the operating agreement, the bylaws and things like that. So there sometimes can be a delay when a founding member is having their legal counsel review those documents because their legal counsel typically is not accustomed to reading captive or insurance documents. So that can sometimes be a challenge, but we usually just get the captive attorney on the phone with their attorney and walk through the documents together to make sure everybody's on the same page. But most of those documents are kind of boilerplate with a few changes here and there.
I would offer that most of my time was spent on the 5-year look back on what the true exposure was, what was the losses, were there any losses? When I'm a broker, if I have a standard client, a risk transfer market, I'm only concerned about losses in excess of 100,000. But when you're doing the captive, we're looking at losses in excess of 5 or 10,000 because we really want to understand what's going on, and we spend a lot more time focusing on the reserves because sometimes, not AIG, but sometimes insurance companies tend to over-reserve. So we just want to make sure that those numbers are real and vetted by Pinnacle potentially. And that spent like 60% of my time in that, understanding what the true and real loss pick is.
So sort of subsequent that, do you have like a novation agreement or anything?
Yeah, we do, don't we?
That is within that?
No.
No,
I thought we did. No? No, seriously.
not yet.
Not there yet.
Yep. Does anyone have any other questions?
Quick one, what stage, yours is an earlier stage in this example, but you start looking at how many members you want to cap off that, or how big you want to grow your group, and maybe at what point do you separate into different groups when you start thinking about that? Can you done it at the initial stage, or is it something that happens later in the life cycle?
I would say that happens down the road. And again, that's really going to be up to the members. you know, do you start out deciding that you're only going to stop at 25 members or 200 members? And then if you have that, you know, 26 member that looks like they would be a really good quality member for the program, do you say no? So that's going to evolve over time as the captive grows. I mean, as long as you have good quality members coming in.
I would think the members would be concerned about the dilution of the vote, the more members you have, right?
Yeah, yeah. Sometimes that's an issue.
Yeah, hi.
I'm just curious, Monica, what do you feel is an optimal number of members before you feel like it kind of reaches what the, if you would, intention of a captive would be?
Wow. That's Joe Lucy at the Hartford, by the way.
That's a good friend right there.
That's
But
right. Thank you, Joe.
We always kind of
Right.
discuss about, you know, the number of members that we have, when to start to lose its intimacy, and so I just wanted to see
Right.
what you guys thought was the right number.
Jeez.
Well, let me ask you, would Hartford have a number idea in mind?
We have plenty of numbers. That's what we do for a living.
Turn it around, I like that. Chris.
Right.
No, I know, it's
Well, and
arbitrary,
again,
right?
Is there really a right or wrong answer to that? I mean, obviously, there are many very, very large group captives out there that are very successful. I really think it comes back to probably the members and the fronting carrier. Some fronting carriers don't want to have a member-owned group captive with 400 members. Some fronting carriers are fine with that and, in fact, are happier with that. So, again, that's something that probably would evolve. And I think as long as you're adding quality members, probably a good thing. Yes.
On the investment side, who manages that pool of assets?
That's a great question.
Is it an executive committee, or do they appoint an investment committee?
No, you would have an investment manager or a couple of different investment managers for the captive. And typically, the captive consultant would bring investment managers to the board of directors and introduce them. And then the board of directors would choose who they would like to work with. Yes?
I'll ask you an easier one. Any perspectives on doing a group captive in kind of an emerging market where some of the members are growing very quickly and some of the unique issues of dealing with emerging markets where the technology is evolving and the exposures are changing rapidly?
So I actually, that's a good question. I actually am dealing with that now. I represent, or I was approached by a large apartment association in New Jersey, and they're concerned about mold and Legionella because it seems to be the hot topic again. And they want to do a captive just for that mold and Legionella risk. So the challenge is you have apartments, you can come up with a pro forma charge per apartment, you can come up with a rate online, but how do you know what the real number is for the premium funding? It's a tough one, because you don't know what the losses are going to be. It could be a BI, it could be a business interruption loss, it could be a tort liability loss. So we're trying to figure that out, so when we come back next year, I'll probably have a more educated answer for you.
Well, and that's where we rely on our actuaries.
That's where you rely on the actuaries, but you're going to see that, you know, I know what, on the environmental insurance, I know where the market is, I know what the price per apartment or unit should be. So, and then it becomes up to the members, how much money do they potentially want to put in the captive, you know? If they want to put $10 a unit in, you know, maybe it doesn't represent a compelling story, but if they want to put 100, 200, 300, or 500 per unit and let it ride, it could be a much different financial scenario at the end of 4 or 5 years. It's a great question.
But that is something that obviously we look to our actuaries to help us with. Right, Rob?
Yeah.
Does anyone have any other questions?
Anybody else? I think we're done.
Awesome. Thank you all
Thank
for
you.
attending.